it could be morning, afternoon, evening, or maybe at night if you're listening at night. Some people like to do that. In today's Lunch and Learn, we want to have a conversation around the basically how to invest, how to raise capital as a pro. A lot of our associates in our community have been asking us, look, you're doing a great job in your development of making people extraordinary leaders in life and business. But some of us are at an age that we want to do something else. And we are trying to figure out what is our next step. I've been talking to Jordi for now the last 3 or 4 years since we are in Spain. And this guy inspired me years ago to start looking at seed investments. But there are some caveats behind it, some lessons learned, hard and soft lessons learned, that for this episode, we want to focus on helping you guys be a pro seed investor and how to raise capital end to end. I've got 2 co-hosts for today. So it's not me being the host. I got 2 co-hosts today. One is Jordi. And maybe Jordi, you can do a short introduction of yourself.
Yes, so my name is Jordi. I've been working on the internet for the last 20-something years, many different fields, different countries, different type of companies. And I've also done my part of investment in multiple companies with different success or failures.
I think we're going to really be focusing on the failures today.
Well, that's most probably where you will learn. You might learn more, because when we succeed, normally we take for granted that we are so smart.
Yeah, that's a good one. And I've got another co-host, Merce, who's joining us. Merce, I was looking through your LinkedIn profile. I was thinking I'm going to write something really short, and then I went, oh my God. So I'm going to leave it up to you to introduce yourself.
Okay, right. Yeah, it's what happens when you get older. Actually, like to explain me then on my side. I started my career in corporate, in M&A department, working in several countries in Europe, acquiring companies for a big corporation, and decided that I wanted to be on the other side of the table. On the guys that were selling me the companies, which were VCs, was something that I wasn't even know in the industry. Came back to Barcelona, where I'm based, started in a pioneer VC, which means, and I stayed there for 15 years. That's 20 years ago. So that means as a good pioneer in the market, it was a good school to have good learnings on good practices and bad practices in the industry. We had to learn there was no toolkit for investments in Spain at that moment. So happy to share today on what I learned on working at PC. During the last years, I've created my own managing company. So I run a PC in Spain, mainly investing in pre-seed and seed stage. That was what I love, to add value on companies at their early stage moments and mainly in technology.
Nice. For the people who don't know me, you do because you're listening to our podcast for ages. Rahim Gulamali, I'm the co-founder of DNA. DNA is a company we started a few years ago when we moved to Spain, when we decided to change the way we live and work. Before that, prior to that, I had basically 3 main stints: 7 years in finance, 7 years in sales tech startup, and 7 years I was predominantly focused on operations. So I've basically seen every part of the corporate life. We didn't want that anymore. So when we came to Spain, we started DNA. And currently what we are focused on is basically 4 main pillars. We coach, and I actually don't want to call it coaching because coaching is teaching you a trick, but see us more as your corner man. We help executives and senior leaders from startups, scale-ups, to build their businesses and help them with the creativity we have learned over the years in helping you grow your business. Not everything is standards. You can learn a lot at school. You learn finances and all that stuff, but that doesn't make you have and grow your business. So we do that through coaching and consulting, corner man actually and consulting. But more importantly for today, we are also focused on building those connections between you guys and experts in business. Connections are really important. If you want to grow your business, you want to learn a lot, you need to be connected. You need to have a network. And that network is there to support you. You also need to be clear on what you need in your network to be successful. So for that, we have our connect pillar within our team. And the last one, and that's why we all are here, is the co-creation. So this episode is not about DNA telling you guys and learning stuff, but it's a co-creation with Jordi and Merce, where we are sharing our experience in life and in business. So you guys can be an extraordinary leader in business and in life. Okay, that was my sales pitch. Let's get into the topic. So a few months ago, Merce, we met actually at the Startup Grind. Guys, if you are interested in going to one of those sessions, I'll put something in the bottom in the chat. But we met at the Startup Grind, and I was actually so enthusiastic on your talk about raising capital. What are the essential guidelines individuals should follow to achieve a successful investment?
So who's that? So
it's a question for you. Question for you.
You mean as a business angel? So someone that's got an exit or wants to start investing?
Want to start investing, because I think a lot of us want to start investing, but we don't know where to start. What do you do? What's your
first thing? It depends on the budget, but actually getting to know how much you want to risk, because at the end, investment is really so as Jordi said, there's success and there's failure, and you have to be. It depends on the risk awareness of everyone. But the first thing is getting to know which is the budget that you want to invest, to get to know at what stage you can approach. Which is your pocket and the type of business, and because at the end you don't want to play all your money in a single company, because it makes no sense. So creating something diversified, so trying to invest in several things. And then the next question is where to get the deal flow, where to find the opportunities. And that probably leads to the network that you may have. So getting to know which is your network and creating the opportunities and getting access to potential opportunities, I think it's the first thing that you have to think about.
Yeah, I think that access to opportunities is really an important one.
That's true that it has changed. So if I go back to when I started 20 years ago, there was not that network at all. If we consider here in Barcelona, I think the same happens in several other cities. There's places where you may find opportunities and where entrepreneurs pitch, and you may identify good opportunities. But also, I would suggest that I would start by getting to know other investors, other people that has experience in investment, like Jordi or myself as BC, to get to know which opportunities they are considering, and if starting co-investing with them, because there's a lot of practices in the legal side of investment that may affect. It's not only getting the right opportunity and putting the money and getting the deal done, but there's a lot of things that may impact and they may affect your success also in the investment. So I would start by going with someone that has already some experience in investments. I don't know if Jordi agrees, and probably Jordi may explain because he started at some point.
I think that one of the things that I was thinking prior to this conversation is, should you invest directly or not? If you ask me today, I might have a different opinion I had several years ago, no? And why? I think that one of the first points that Merce is making is, when you're in front of an investment proposal and you get to final stages and you need to review all the legal documentation, if you have never seen it, it's like, what am I signing? I'm not a lawyer myself, that's why I married a lawyer. But I have read many legal documents first to receive fundings for my company. So I'm quite well aware of what I'm willing to accept or not, and understand what the other side is. But if you've not done it, and you get those documents, what are you going to do? You're going to pay a lawyer to explain you what you're going to sign. Either then you syndicate or not, or you invest with people you trust, and therefore you trust their opinion. But that has, let's say, a cost, or you want to learn, and you have to invest time in learning. And the other way around, and of course that has an implication, which is how much you're going to invest, is can you put that money on someone else's hands, like Merce or a fund of funds or another financial entity, and therefore, of course, you don't have that decision power because you delegate that investment. But that's an option, and it is also, Merce was saying, there were not that many options when we met almost 15 years ago, nor on the entrepreneur side, nor on the investment side. Okay, so that has grown a lot. But also the financial options to raise capital have appeared, many different ones. So I think that if you want to start investing, you need to first think how much you can invest and what's the best way to do it for you. So you need to talk to a lot of people, understand all the different options that you have on the table, and then decide how much you want to put aside of just the pure money.
I think it's a really good one, really good. If you look at the beginning, Jordi, you were talking about learning from our mistakes. What are some common mistakes people often make in the world of investing?
Not having a clear understanding on what they are investing.
I think there's so many. Oh my God. And there's so many mistakes. Actually, also, if you invest, I guess you're willing to get an exit at some point. So first, finding a good project that where the route to the exit is clear. And at some point, the entrepreneurs, they are creating something where in the future you may exit because they are considering selling the company, for instance. Also, validating cap tables, legal terms, because you can get stuck in as Jordi was saying, it's really complicated, and it's getting more complex, I would say, yearly. So having a good legal a lawyer that helps you on structuring and everything, that's pretty important, because otherwise you may get common shares that at the end you don't get anything when the company is even sold. So there's several things that may impact also on conducting and choosing the right founders and the right entrepreneurs, because they are crucial to take the company to a success. No?
I think that there's another very common mistake, which is being too emotional.
So,
and investments are rational, or should be somehow rational. The emotional part is the entrepreneur, that we fell in love with ideas that are crazy and most likely not to succeed.
Yes, and even investing in things that you understand.
I don't invest.
For me,
I don't invest in anything I don't understand. I'm sorry,
exactly.
and I've missed several options that could have made me millionaires today.
Same for me. I love all the health deals, because they seem to change the world. So it's so people that are trying to create a vaccine for something, it's amazing stuff, but I don't understand anything and I cannot add any value at all. So I have to believe, and then it's kind of it would be like playing or getting lottery at some point.
Well, what I was saying is that it's important that you understand where you're investing in and what the investment actually means. Don't invest in things which are not in your experience level. What I also like is, and that's basically what I always say to people I coach who are working in a startup or starting up a business, is the first thing I tell them, what is your exit strategy? And they look at me, but I'm starting. Yeah, but you need to know what your exit strategy is. When you start a business, you need to know how to get out of the business, because if you know that, you have your target. You can put on the milestones during the journey that will basically identify, do I keep investing? Do I invest more? Or do I stop? What are those conditions? you really need to understand it up front. So I like that one too.
And you need to understand that there's one thing that you need to truly understand if we are talking in this stage. This is super high risk. The chances that they succeed are very little. Most likely, if they succeed, the reward is huge. But you're investing in the idea, PowerPoint, or the super limited MVP of whatever you want to do. So the chances that that gets to a product market fit, a scale-up company, or even acquisition is tiny. So if what you're looking for is something more with less risk, then you should look into other options. And that's something that, because we all talk about the Google, Facebook of the world, and if I had been a seed investment there. But those are very little number of companies that get to that stage. For every one of those, there's millions of companies that have died in the process with investors behind. So I think that it also needs to come with how much risk you want to take on that amount of money that you can invest.
And how much time you have to follow up the companies, because it takes a lot of time also.
Yeah, so most likely for these guys, the professional ones, they're looking at 10 years investments. So the fund has a 10-year, normally that's the theory, 10 years life of it. So
for me, it's a full-time job. Exactly.
So if I invest with them as a business angel on any of those opportunities, I know the time most likely if it goes well, maybe in a Series B or so, someone will buy out my shares and so. But also, am I willing to co-invest or invest in later stages of the company if things go well? Do I have that financial power to do so? Because if not, I'm going to get diluted. It's true that at a higher valuation, but then my power is less on that company.
I think that if you look at because I work mainly for private equities, that's my core source of consulting income, where I'm joining companies.
Is it Rahim that it's
got frozen? Okay. I thought it was.
Yeah, it was my wife even.
Costs fully. I think I'm stuck.
No, you're back.
Yeah, I'm back. I think I have some internet connection issues, so I'm just going to ask the next question and let you guys talk.
Okay.
So, if you look at the market now, what will be your suggestion?
Okay, so let's put it this way: is there a market today for investment since everything is frozen? But I'm assuming that the question goes something like, with the current market, is there a sector or something we're looking to, or
something like that you were suggesting? Because you started with private equity. I guess that private equity, they are suffering tough times because it's difficult for them. So even production costs have increased. So private equity's got right now difficult times. I would suggest in VC, how we see the market right now is that growth stage is also the down, but also in seed stage there's activity, and probably what we see more and more is what Jordi was saying initially, so that business angels are investing through funds more than in previous years. So in my case, and it's great that Jordi said it and not myself.
No,
because it's kind of I'm not here for selling my fund, but it's true that we have.
Because you've seen it in Spain lately. Yeah. There's a lot of funds who are offering smaller funds where they're looking for entrepreneurs with some success to close these funds and so. But as of today, one of the things that we've seen is that the market is changing. No, the investment market is changing. What companies are being requested by the investors is completely different. We were all aiming for growth at no matter how much money you were spending. While you were having growth, you will get the funds. Now that has changed, and we got into an area where we see more traditional businesses where you need profitability. Profitability was something that I have never heard in 20 years.
Which is back to common sense.
Back to basics. Yeah, but
to basics.
But that was not that was not the case for 20 years, no?
Exactly.
But what it is a fact is that there are hotter sectors or markets with more hype, but that happens. There's like these cycles that happen, no? So we went through 20 years ago in Web 2.0. Then there's a trend, and every time there's a trend, it's easier for those companies within that trend to raise money. Now it would be AI. If you have some AI in your product, it's like a few years ago, blockchain, few years after another thing or before another thing, no?
So you think it's still on time to invest in AI now, because it's already quite far?
So you see what I think? That of course there's always time and there's a lot of things to be disrupted, but what it is a fact is that the big players, the big computing players, the big cloud players are killing a lot of those startups, because all of a sudden Google, Microsoft, Amazon, they are all releasing all those libraries and those AI models, LLMs, that we are already using within our applications, that few months or a year ago, it was a SaaS from someone. So how do you compete with your small startup of 10 people, even with some funding, with someone that all of a sudden all the cloud players are offering?
I would say that we're receiving a lot of AI opportunities right now, but what we check is that they really solve a pain in the market. It can be so that really someone is willing, and we check it since we invest in pre-seed and seed. So that's the idea, the PowerPoint, and there's not much metrics, but we try to understand the proposal to the market, which is their unique selling point, and try to identify potential customers for them. So if there's someone that is willing to pay for that, hasn't received any, and sees that there's something, a competitive advantage for that product, then we invest. And it may be AI, but it may be also blockchain or even IoT that we never seen applied good businesses on IoT. So whatever the trend from previous years.
But it is a fact that, and it has happened always, no? That you all of a sudden, so AI has been there for ages. The thing is that computing is getting cheaper, therefore we can do more things. It happens to us. We have had in my current company AI products for the last 5 years. And now it's super easy to sell because I don't have to explain what AI does. While in the past, I had to explain people what it was doing, no? But first, you need to really understand if it is proper AI what you're doing. And second, as Merce says, someone is willing to pay. And third, what's your competitive advantage? Because those large players with deep pockets are going, like in every single field, you are easy to be consumed by those large players, because the only thing you have your only advantage as small companies, your speed.
Maybe another question. We're talking about AI and the modern technologies. For me personally, diversification of the portfolio is really important. How do you guys see that?
I think Jordi said initially, it depends on the pockets that you have, but it's basic. So if you have only $100,000, you should deploy it in at least 10 to 15 companies. So that means that you got to really to pre-seed and really with a small ticket, and also from your budget, you have got to consider what you're gonna dedicate to follow-ons, because normally you enter in a company and you have to follow on afterwards. Otherwise, you just get diluted and you just have a ridiculous stake in a company. So considering all that, it depends on the budget, but obviously you always have to diversify. So then reduce the amount and then look for companies on that stage, or look for a fund that may diversify for you. But that's basic. It's quite difficult to, and it would be not even us that we are a full-time basis looking for scouting opportunities, and we never get the whole portfolio to succeed. So,
No, and it is true that you want to diversify, but it is also true that you have more knowledge in certain areas. So you might understand and add value in some particular areas more than others, no? So even within a vertical or within a scope of knowledge, you can diversify, or you should diversify within that. No? If not, as Merce
you
said
may be
before,
an expert in software as a service, but it may apply to several businesses and several industries.
exactly.
So by that way, you are diversifying.
See, I'm still struggling a bit with my connections.
Sure.
So I
We can
missed
keep
out.
talking.
Yeah, but you guys can keep going on. You can keep going on. Hey, if you look at, can you share some success stories from your own personal experience? Things that could help people identify when they're looking at investments, the triggers, the pointers in there that would be good to look out for?
So the first thing I think we always look is the team.
I was going to say the same thing. So we basically, because business angel activity with pre-seed investment, which is my stage, it's practically the same. So there's no metrics. So what you have to validate is the team, and by validating how you may do it, probably it's just by, so if it's someone that has entrepreneurial experience and it's a second-time entrepreneur, that's normally a good sign. But also looking for references and looking for who's been working with that person before, or who has been led by that person before. So getting to know the network of the founders, that's crucial. Also the strength and how the whole team, because normally it's not a single founder, so how they met, which are their strengths, which are the things that they lack, or the experience that they lack in the whole composition. I know. And we basically spend time with them.
For me, that's the first thing. I mean, the team, of course, the idea, you need to like the idea, no? And once you're convinced that the idea might have some potential success, are these guys the ones who are going to build this or not? And the only way to know it is you need to know them.
And spend time out of business. Getting to know them as a person, not only because you're going to be dealing with them for several years.
And one of the questions that I always ask myself is, do I want to see that person when things go south?
Yeah.
Because things will go, things will go south throughout. That's my question. Things will go south throughout the period while you're investing in that company. So how do you see yourself dealing with that person when things are not working properly and there's tension and there is problems?
Yeah, and they will come.
They will, for
sure.
I was listening to there's a podcast I love, Acquired, which they have an interview with NVIDIA CEO this week. They were almost close 3 times. NVIDIA, a $1 trillion company today, no, but 3 times almost dead. So that happens even if you have Sequoia backing you. So that's going to happen.
It's going to happen. Sure. Hey, looking also a bit at time, Merce, I think because your company helps other seed investors also with finding investments?
We co-invest with everyone. We may lead or follow, so we may take both roles. And in some cases, just putting a case of a company that I'm investing right now, it's a company that it's working in, it's a French company and wants us to invest in it because of leading and opening the Spanish market. What we've done, it's introducing the company to 2 different marketplaces. It was mainly for e-commerce sites. And we have introduced the company to 2 big e-commerce in Spain. The 2 founders of the e-commerce have co-invest with us in this proposition, and we are now closing the deal. So we offer, and if it may fit, it's not that we have something with them structured in this case. They are investors in our fund, the 2 guys. As Jordi was said, they are successful entrepreneurs and they invest in our fund. We share the opportunities before investment because they are an LP to the fund, and they have a specific knowledge of the industry, which is worth, because we are agnostic in terms of sectors. So any VC, we know a lot of things on how to help companies go through different stages, but we don't know specific things of any industry. We seem to know of a lot of industries, but we don't have any idea at all. So we check with people that it's on the day-to-day working in that industry. And by that way, we offer co-investment opportunities to specific entrepreneurs or business angels or business angels to be. But it's not something that we do kind of a structure. It's something, it's deal on deal. We always, if we lead the round, we offer it to other peers, other seed funds, other business angels that we know. But also it may come like something like this one. So something spontaneous.
So if people want to partner with you, how do they do that?
So then we represent them. So we lead and we they syndicate with the fund. So in anything on the legal side and how we enter and how we exit the company, we just go syndicate with them.
Okay. Nice. Jordi, do you have one or two main tips if you look at people who are willing to invest? The most important ones you want to share?
I think the first one is be realistic on how much money you can invest and how much money you're willing to lose. Because this is, as I said it before, and I've learned it the only way that's possible, which is you might lose everything. So that should be money you don't need for any other thing. Because, and I've seen it, people who has invested in companies and months later, I need that money back. That money is not returnable. This is not like putting on even if you go to the stock market, you might take some loss, but you get something back. No, once it's deployed, it's deployed. So I think this has to be money you don't need for the next 10 years. And if that you lose all of that, bad luck.
And going back to invest through funds, it's the same thing through funds. So it's liquid and you have to a commitment and you have to deploy it. You cannot even decide to reduce the amount that you invest afterwards.
So for me, that's the biggest, the most important thing is knowing how much risk you can take, how much money, and then let's say forget about it. It's like a long-term investment where if things happen, well, if not, and most likely that if you do it properly, you might have a success ratio as a normal fund, which means that if you do 10 investments, one might go super well, 2 or 3 might return what you've put, and the other ones will be completely lost. If you do that, congrats. But the problem is when people, because it's super sexy to invest in startups, but what people are not talking is the super high risk that it is, that you might most likely will lose a lot of the money. Having said so, of course, there's people like Merce and the professionals who make a living because they generate the returns. That's why going solo is super complicated, because you might put the 5 investments you can make in the 5 bad ones. So that is also something that when you look in that investment, if you see good or professional investors in that same round, it's a good indicator. If you see no one with any pedigree, why?
Good one.
Yes, that's pretty easy that when you start in the market, you get all the bad deals that no one wants to finance.
Because the good ones are already taken. That is like trying to go out with the most beautiful lady in your school. She already has all the options.
Like in the disco at
that's the same. That's
at 4 o'clock in the morning.
So
in your case, it was the lawyer, huh? In your case, it was the lawyer.
I don't want to read contracts. No, but when you start investing, you realize all of a sudden that you like the idea, you think you like the team, and all of a sudden you ask, and there might be people committing to put the money. And that's one of the things. You also should cross references of who else is investing in the company. I have people I won't invest with. I don't like them. because I've been doing this for long, but others which I like, others that I don't know.
That's also a good point.
So you need to know, because that's part of the marriage. The marriage is not just you with the company, it's you with the other co-investors, no? But in this world, you get to know the people, you know, the professionals, you know, the super business angels, you know, the typical business angels. If none of them appear, most likely this is not a good opportunity.
Nice one.
And there are lists, there are public lists there on the internet. It's super easy to check the most active, the most active funds, the most active business angels. So it's super easy to cross-reference if those appear or not.
And from your perspective, Merce?
Yeah, I think it's the same thing. I was saying, make sure that there's someone that has knowledge in co-investing, but I agree on who are your partners in the company and also how much money they are going to need to succeed. Because probably if they don't have a clear equity story, how many rounds they are going to be needing, when are going to reach break-even, and when they are going to become profitable. So that's really important to get to know what is going to be your stake in the future. So.
Yeah. I think one of the takeaways I will take from this one is that investment is not about the money. It's actually about the people you're going to be working with, the marriage you're going to be signing up for the next 10, 15 years, and that partnership. And if that's not right, keep your money in your pocket.
Sure.
Rebecca, do you have questions?
Yes, actually, just I wanted to thank you very much for inviting me to the session. Actually, I'm not an investor myself. I'm a co-founder of the fintech startup. It may be in the future. I will be angel investor, but right now is building my my startup. So actually, I wanted to ask a couple of things. You mentioned that obviously the first thing that you are looking is the team, but before the team, if you don't understand the business, obviously it's something that you are not interested in investing. But what about nowadays, right? The investors, they're looking for those opportunities, those startups, they are pursuing some impact focus businesses, right? They're pursuing to meet the SDG goals, or so what's your opinion about the impact investing? So even if you are perhaps you're not familiar with that particular industry, but that startup pursuing something that towards the impact, how do you assess this?
Well, if you would have asked this 15, 20 years ago, that would have been a problem, no? But today,
yes, but nowadays
but that is why you see already funds in different stages of companies already with those same initiatives, and you see business angels or investors with those same initiatives. I think that there is a market for all those types of companies with clear investors who have risen capital just to invest on those areas. So my point would be, I don't invest basically because I don't understand it, but I can think pretty fast on people I know that are investing on those areas. VCs that have created dedicated funds just for that everywhere, even in Spain.
Right.
In my case, I recall some years ago that people was talking about philanthropic investments. So that's kind of this impact right now.
Right? Yeah.
But it's a difference, because then they weren't looking for double impact, I would say. So, which is good, is that the impact investment, as we understand it right now, it includes a return on the investment and a return for society. So it's with that, any VC, so we are open to any impact or impact startup. So companies that have this side of double return. And most of the funds, we are obliged right now to fulfill on ESG and be responsible on our investment. So we try to work and we conduct, part of our due diligence is to make sure that all other companies in our portfolio, there's no environmental impact, there's a governance that it's diverse and that fulfills So we try, and if not, we try to foster and trigger that they improve in the future years while we are in their board. That's one thing. We don't have a dedicated impact fund, but as Jordi was saying, there's I understand, and there's several funds already in Spain that are impact funds, which are great because they are specialized on that, and they their network to open doors, because some of them need public institutions and need, so they may add and be really helpful on that, which generalistic funds we are not. But we're open, and we are seeing more and more, we are seeing a lot of sustainable things because it applies to any industry, and it may go through any technology, and it may have an impact. So it's something that we are open to invest.
I think I may want to add to that one. What I've seen with the equities I'm working for is that 5, 6, 7 years ago, they didn't have a team focused on governmental funds. ESG, often you can get some money from the European Commission if your idea is good. And basically your profit margin is going to come because you're partially funded, basically. So more and more equities are starting to have European Commission funds or teams there who are predominantly focused on, one, investing in these kind of companies, but getting co-funds through European Commissions, local governments, state governments, etc. So there's a more focus on that one. The thing currently with the larger ones is that we are obligated to think about ESG. If you don't have ESG in any of your mission statements, actually, you're basically saying, I don't want to have any clients. I shouldn't be saying that, but it's kind of like a fashion statement. If you don't have it in your mission vision, you don't exist. So more and more companies are looking at how can we incorporate that into our work. And from an investors, from an equity perspective, they're really looking at, okay, how can we co-fund this with governmental agencies, European commissions, grants, and all of that stuff. But can you tell me a bit more about your company? Just for my curiosity.
Right. So, we actually, 𝑢Pledge is the impact platform that that connects retail everyday investors with sustainable startups, and so we use gamification and artificial intelligence. I'm based in Barcelona, in Spain, but my startup is based in the Netherlands, in Amsterdam.
Okay. So you get the good weather.
Yes, actually, yeah. Yeah, but we'll see in the future, because as you know, so it's very strictly regulated space that we are. So so the regulators, they prefer that the co-founders and the directors to be based in Amsterdam. So it's a sort of negotiation. It's going to be with
I would
AFM.
prefer it to knowing the regulators here.
Me too.
Yeah, and now we are going to have a face-to-face meeting. We are the latest stage, we can say, for the pursuing the license, and it's one of the questions that actually they raised towards my person, right? That how I'm imagining this, like traveling monthly to Amsterdam, it's not exactly. So yeah, so I need to defend this question, and we'll see the face-to-face meeting with them. But already they raised this thing, so yeah.
And it's not that far. It's only a 2-hour flight.
Oh, it is nothing for me.
I know,
like all my life I've been traveling, so nowadays and the license and the whole the fintech, so the whole startup, the way how do we imagine, obviously we apply for the cross-border licenses, meaning that I can passport to Spain, because you know, Spain is going to be a very important market, actually, you know, it's going to be the most important market for his business. So, and France and Italy, etc. But obviously is, you know, the regulator is AFM in the Netherlands, right? So
much better.
Nice.
Much better,
yeah.
because I've been dealing with licenses.
Do you have other questions?
Yes, just one more question. You mentioned obviously the first thing that you look at is the team, right? And you want to know the team, and because at the end of the day you need to work with them. But my question is, what exactly the level of your involvement in the startup that you have invested?
You want my answer as an entrepreneur or as an investor? Or
no, as an investor, not an no, as an investor. So, yeah, absolutely.
But he was invested by VCs, no? So you can also explain.
My point is, after getting money from multiple VCs, what you get is money. If anyone is selling you that you get more than that, reality is that most likely you don't get more than that. And for one main reason, it is true that investors can help you in many different ways, connections, but
yeah,
I would limit very much the impact on your business. Why? Unless you have someone, an investor who has done exactly what you're doing, which is very rarely to happen, what they know is about business trends, connections, financing, anything about your business. So it is very complicated that you get direct help for your business. So what you're getting is money. There is a word that I hate, which is smart money. Money is money. Smart or dumb. It is money.
That's what I was saying before, that we don't know in the industry. That's why we try on our due diligence to say, okay, let's introduce potential customers. So it's kind of win-win. You lose your time because we know we spend a lot of time, but as we were saying, we spend time to get to know the team, because that means that we validate them, we think and consider that they are the right guys to execute and take the company to the next stage, which means that we don't have to involve at all. If we had to, we would invest to another company that we don't have, because we don't even have the time. So our business is get money from LPs, select opportunities, make sure that they are the right guys, and then
the right guys
to run
we
have to exit.
But the problem,
not to run their business.
And they know the trends, and they know a lot about they can benchmark very easily your KPIs, your business indicators or so. But they are not going to move your needle when your whatever KPI is not where it should be. They can tell you, you should be here. How you get from where you are to there, that's your job. So you get money.
And we can
I've got a little bit of a different take on this one, but that's more biased in the job I do. So they're looking from an investment perspective. I'm being pulled into investments to support those companies.
Yeah, but that's the difference. The professional investor has the network, and they can bring you people, or they can reference you people that will help you. That is true, but the reality is that they are not fixing it.
They're not fixing. That's correct.
They can drive you to the and I get a lot of deal flow from my professional activities from my current investors. They see a problem. They see a problem, and they know who can help you fix it, but they are not fixing it.
That's correct. That's correct. Yeah.
I was going to say that we spend more time with companies that don't perform well than with those companies that succeed. So that's true that and normally, because we want to exit anyway that company, and those companies that remain as zombies in your portfolio, that's where probably I've spent most of my career trying to see how we sell something inside, which are the assets that they may have, which is the technology, if they are doing something to get out of that company. But that's when we get involved, and that's when we conduct probably and make decisions or make them decide on doing things or
you don't want decisions. So you don't want that.
So I don't want that exact. So what I don't want is to get involved at that point.
No, not you.
And reach that point where I have to get involved.
So even Reka, you don't want to get to that point.
You don't want to get to that point. I agree. Cool. Hey guys, we're running out of time. I think we had a really great conversation, and we touched a lot of elements in this topic. Reka, feel free to contact us if you want to have more information or if you want to get connected in the future. Jordi, Merce, Thank you so much.
No,
You guys
Thank
rock. You even helped us through my connectivity issues.
no, so it was a pleasure. It's always a pleasure being with Merce anywhere. And
Sure. Then we have to see it out of the screen, Jordi. We have to meet shortly.
Have a lovely weekend, all of you.
Have a lovely weekend, all of you. Thank you so much.
You too.
Bye.
Thank you.
Bye.
Bye bye.